How high? Markets ramp up terminal charge pricing as inflation bites. Traders have sharply expanded where they see fee hikes by way of the world's pinnacle imperative banks ending this cycle as red-hot inflation readings may force policymakers to act extra aggressively to quell fee pressures. Dubbed the terminal price, asset managers and debtors should take the one's tiers into consideration in planning funding and investment selections. They will in the end determine whether coverage tightening will stop with a tender or tough landing for economies. In the U.S., Fed fund futures are pricing in over 300 foundation points of charge hikes, implying a terminal price of around 3.9% in mid-2023, up from around 3% on the start of the month. For the European Central Bank, cash markets now fee in around 290 foundation factors of hikes, to put fees round 2.4% by way of July 2023. This compares with a upward thrust to 1.5% by early 2024, priced on the begin of June. At the Bank of England, traders are pricing in 260 bits per second of hikes by means of August 2023 that would place charges at 3.6%, compared with 2.9% a week in the past. The movements come as U.S. customer costs improved in May and rose quicker than anticipated of their biggest annual boom in nearly 401/2 of a year, suggesting that the Federal Reserve ought to maintain with its 50 foundation factor hobby fee hikes at least through September. Similarly, Eurozone inflation rose much faster than predicted to some other document high in May, boosting the case for large moves from the European Central Bank in an effort to end bond buying and begin trekking fees in July. The movements are a stark evaluation with May, while buyers had cut estimates on where terminal quotes would hide as markets embraced the perception that inflation had peaked and shifted there to economic increase concerns. This entire hassle turned into created by using inflation, it has to be solved via inflation. Until there is authentic slowdown in inflation momentum, I don't suppose anyone can relaxation smooth, said Rohan Khanna, strategist at UBS. In Britain, cash markets raised their estimates even as information on Monday showed the economy shrank in April, adding to fears of a sharp slowdown simply 3 days before the Bank of England is possibly to hike fees again. Despite this, the market expenses the terminal price at 3.50%. So the marketplace is telling us that, I want to peer increase statistics be quite extra worse for me to think again my questioning for the critical banking trekking cycle prevent, Khanna stated. Investment banks also are ramping up their forecasts. Deutsche Bank (ETR), DBKGN economists on Friday raised their Fed terminal fee forecast to 4.125% in mid-2023, at the same time as Morgan Stanley (NYSE) MS stated that if the contemporary inflation backdrop begins to appear like that of the early 1980s, markets could rate in a terminal rate of 4.5% 5%. Graphic, Fed terminal rate 20 image percent 201,655,115,726,737.png